the Market Musings podcast. Well, hello and welcome to the Market Musings podcast here from Stopbox, where today we're joined by, of course, Charles Archer from Investing Strategy. Charles, always great to be speaking to you. How are you doing?
I'm doing very well, Mark. How are you? What have you been up to recently?
Yes. Very good, very good. Busy interviewing different mining companies, of course, and navigating this world of small cap mining exploration companies. How about you?
Yeah, not too bad. I mean, that's generally what I spend my life doing, the mining companies, the biotechs, and, wherever the highest risk, highest reward is.
Yeah.
And yeah, I mean, it's getting quite fun. I mean, more generally, it seems that the sentiment is perhaps returning to the markets a bit. AIM is, slightly off its lows. You're hoping for interest rate cuts later on in the year. There's a few IPOs being lined up, where previously there was a dearth of them. So, things are looking a little bit more positive. It is how I feel, and I think that we had a couple of months in a row, in Q1 where a lot of companies raised finance at like very heavy discounts. Having got that out of the way now, hopefully we can build the sentiment back up again.
Okay, well, it's interesting that you talk about that. That's good to hear because, yeah, it's some companies struggle to get raises away, while other companies doing much easier in that regard. And obviously, the very more advanced projects, such as Sovereign Metals, for example, doing really quite well there with their JV with Rio. It seems like there's definitely sentiment coming back. It's going to the more attractive projects first, perhaps, particularly copper, for example. Of course, copper price doing very well as well. But the money will make its way down to the smaller end of the market, always does.
Oh, I mean, copper is kind of red hot in the small cap space. Obviously, you've got the Zambia explorers, so Arc Minerals, Galileo, Extract, African Pioneer. But then you've also got East Star Resources. That's the one looks interesting. Asia Met, which might be rising again in the near future. Phoenix Copper. So there are a few interesting copper plays down here in the small cap market, and because the copper supply gap is so large, I think what's quite interesting, speaking to CEOs of these companies, is that previously where a major would only be interested in kind of like a massive tier one copper deposit, the smaller deposits that they might have glanced over. What's the word I'm looking for? Not sure. The smaller deposits, which they might not have worried about too much, they're now potentially more interested than they were in the past. So I think copper companies, are very well set up. Obviously, as is gold,
gold as well, of course. Yeah, gold
record highs all the time.
It's off the record highs, but yeah, it's still at record highs.
Well,
but it's off the peak. Yeah.
Yeah. But, if you saw a headline today saying gold hits another record high, you wouldn't even blink anymore, would you? It seems to be, and obviously it's a massive central bank buying. Potentially, you've got people who are thinking that the US dollar is no longer a store of value given the debt and deficit crisis. Or potentially that the US might return to a gold standard. Those kind of rumors are floating around now, if a bit premature. But then in China, I think there's a lot of gold buying from the central bank. There's lots been talked about a BRICS currency for years, but I think it's also the case that just individuals in China who previously put all their money into real estate, which accounts for about 40% of the country's GDP. They're now worrying that the real estate, is going to financially collapse, and therefore they're going for gold because they think that's a better safe haven asset at the moment. So you have potentially 1 billion buyers of gold in China who previously weren't interested in the metal, and now they are. There's lots, and there seems to be a lot of geopolitical uncertainty, and whenever you have that, people buy gold, and
indeed,
yeah. How long can it last for, though, is the question. How long will it just continue to rise and rise and rise? I mean, I saw a stat the other day, it was interesting. The house in the UK, the average house bought in 1984 and 2024, it might have risen massively in terms of fiat currency, but you'd pay the same amount of gold for it.
Yeah.
So, we've retained a gold standard of sorts regardless of what the currency is doing, which I find quite entertaining.
Yeah, indeed. Well, I mean, on the gold subject, of course, today the focus of this podcast is on Fulcrum Metals, and off the back of the article that you wrote, Investing Strategy, the fairly lengthy and detailed article all about Fulcrum Metals, who are mostly in that gold space. So, I mean, the article was, how long did it take you to write it, first of all? I mean, because it's very detailed there. Lots of research must have gone into that, Charles.
It takes time to write these things in like a day or two, but it's I think what the space is kind of lacking, and what I felt for a long time is really lengthy, detailed investment cases for these companies. Often you find that people will do something like a 500, 1,000 words or so, or there'll be like you might do an interview with a CEO that lasts sort of 10 minutes, and that's great if you are already an investor and you understand the entire investment case and you're kind of just topping up your information. But if you're new to a company like Fulcrum Metals, or Sovereign Minerals, which I did a recent one for, um, you're it's very difficult to know exactly what the investment case is. I was actually talking to you offline, just before the podcast about, when I do articles for like Tesla, for example, for like larger providers. It only needs to be a few hundred words to get the salient points across, because people know, what the company is, what it's about, what the main investment case is. Whereas with a company like Fulcrum, if you're a new investor, you need that that kind of baseline where you have all of the information succinctly put in one place. And yes, it's long, but it's worthwhile. And one of this is what like broker notes were meant to be. And I've written broken notes before, but I think there's two issues with broken notes. The first is that often they have information that's not particularly relevant, and the second is they're writing towards the price target, which it can influence what their decision making when they're writing the notes. And third, it's very different. You're not really allowed to put in any kind of like personal speculation when it's FCA regulated. So whereas with Fulcrum, I look at this and I look at the technology they have with extract is about to be licensed to. That has really, really serious potential, which we can go into like the speculative realm, which maybe we'll do a little bit later in the podcast. But yeah, I know it took a little bit of time, but they're definitely worthwhile. There's about 100 small cap miners or explorers on the AIM market. So I'll hopefully get them all done within the next sort of 12 to 18 months, and then go from there.
Yeah.
Well, eventually.
Good luck with that. Yeah. But I mean, there was lots of detail in there. And I mean, we can go through it almost in the order that you wrote it, really, starting with the Athabasca uranium project that they have, but they've optioned off that now to Terra Balancancia. Is that how you say it?
Oh, I believe so. Or something similar. Yeah.
Yeah. So, I mean, well, what's your take on that? I mean, obviously to develop a uranium project like that would take a lot of money, a lot of time, and clearly Fulcrum have seen the opportunities better to do an option agreement there and retain some upside potential through that NSR, that net smelter royalty there. So, I mean, what do you think? Is that probably a good decision? I mean, bearing in mind we are going to get on and talk about the tailings opportunity, which is clearly where Fulcrum are seeing the potential here. But just purely taking that uranium project, do you feel that was the right kind of move for them?
Oh, I think so. I think when you're running like a small cap, you need to have like a focus. And if your focus is split between too many assets, unless you are like an incredibly hardworking and very, very efficient person, it can be difficult to maintain focus on multiple projects. I think this is a good idea. I mean, these assets, Charlotte Neely, Fontaine Lake, Snowbird, and South Pendleton, Athabasca, it's the world's #1 uranium address. It's the place to be. Power Metal has a uranium exploration IPO that's coming up shortly, I believe, as well. It's just where world-class uranium deposits are found now. They had some, quite interesting early results from exploration at these assets. But at the end of the day, an option agreement where they can get, Terra Blanca can get 100% interest makes sense, because Terra is going to fund over 3 million Canadian dollars of exploration. You're going to pay Fulcrum a little bit of cash and also give Fulcrum, $3 million in Terra shares. Add in that 1% net smelter royalty, and I think that looks like a really good deal. Because it gives you for that financial optionality for the future as well. And given where the tailings business is going to go, I would imagine it'll be helpful to have that money come in, especially if the asset gets developed and you get that net smelter royalty get cracking. I mean, what do you think? I think it looks like a good deal, personally.
Yeah, I think so. I mean, I was a little bit disappointed, I must say, when the news came out and I interviewed Ryan on that because I was, obviously uranium. There's not many uranium plays out there on the
Yeah,
London
it's true.
markets, and uranium all-time highs. We can see where it's going to go. So I just thought, oh, it's a bit of a shame. But then he kind of explained, that it was the better option for the company, and I think it ties down to this new tailings strategy, really. But yeah, I think it's probably a good deal.
Yeah.
They've retained the upside there if that project ever becomes anything. And let's face it, most projects don't go anywhere, do they? In
Well,
this
I mean,
sector.
three point. Well, I found these out. Is 3.25 million million Canadian dollars minimum work expenditure, right? How Fulcrum's got a market cap of what 7-8 million pounds. Had they had diluted shareholders to raise that amount of money, that'd be massive dilution for
Yeah.
exploration that might not have gone anywhere. So I think for the position the company is in, you're not going to get much better. But yeah, I do agree with you that there's not many uranium opportunities on the market in London. Or like I say, Powermetal and their uranium energy exploration IPO delayed because of excess interest apparently. So hopefully that'll be coming up in this quarter at some point. Um, Other uranium plays, I suppose there's Neo, which is a bit of a doldrums at the moment. And I is that it? I can't. Oh, wait, no. Is it? There's a couple more. There's a couple more, but there's not much
Yellow
in
Cake, is
London.
that one on the London markets?
Oh, I think Yellow Cake. Yeah, but Yellow Cake's more a it's not like really an exploration place so
No,
much
it's
as
much more further advanced. Yeah,
yeah,
indeed.
yeah.
Yeah, yeah, yeah.
But yeah, I know. I
Oh,
mean,
Thor Energy, actually. Thor
four.
Energy have
There we
got
go. That's
something.
one. Yeah, yeah. So there's a couple, but there's not much for uranium in London, sadly. But it does mean if you do have a uranium IPO or something similar coming up, then hopefully you'll get a fair bit of interest. Assuming uranium holds up, and we know how the mineral cycles tend to go. But yeah,
Yes, indeed, 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 indeed. Well, of course, they've obviously that's the uranium side of Fulcrum there, but then, of course, your article covered the Ontario assets as well, namely Big Bear and Tully.
yeah,
The gold projects there. Now, of course, Big Bear was originally Panthers, wasn't it? That was
yeah.
then rendered out
But,
to Fulcrum on the IPO.
but I mean, like obviously there's Big Bear, there's trying to think of the words. There's Tully, there's Jackfish Lake as well, and there's a few non-core assets. But Big
Mm,
Bear, we've had the phase 2 rock sampling and geological mapping back. 141 rock samples, and yeah, some really interesting gold finds. But this is these are these assets that they've got drill ready targets now. So there's 4 drill ready targets. Schreiber Pyramid number 1 north and number 1 south, Johnson McKenna and Cook Lake, and then 5 further targets that just not quite ready to be drilled yet. And I think it's the case that on Big Bear in particular, they've now got drill targets ready to go. When are they going to drill them? How are they going to fund the drilling? Is it an operational priority at the moment given the strategic shift? Would it be a better idea to to vend it out, to sell it, to do a joint venture? I don't know. I mean, that's a question for Ryan, the CEO. But I think it's got the there's gold there of some kind, and they need to drill it. It's as simple as that. And then with Tully, I mean, the last status update was back in October. So a fair bit of time away.
mm.
Um, but they're doing final data reviews. They're looking to use first and the same methods, which is it's a relatively new idea for photosynthase, but it's been worked in other similar deposits. And the general idea is, I suspect anyway, that once they get those additional 5 targets at Big Bear nailed down, whether they want to drill them or not, and once they've decided where they're going to drill at Tully, they'll do it all. They'll do a strategy potentially all at once. And then it's obviously a question of funding it, and potentially that money that comes in from the Athabasca assets. If you time it right, maybe you could use that money to fund the drilling at the gold assets at Ontario. But again, the Athabasca assets, these initial Ontario assets that they had, are kind of not, the reason to invest it. They're nice to have. They're
Mm.
additionally helpful, but it's the tailings-based assets, and in particular, the technology that they're potentially going to be licensed to use.
Indeed. Well, I mean,
Yeah.
certainly you need to find out from Ryan and the team what their plans are with those Ontario assets there, whether they, as you say, bend them out, joint venture, look to put a bit more value or money into the ground to perhaps see any potential there to either look to
Well, I
develop
think
it further or indeed, move it on.
Yeah, well, I mean, Big Bear, you've got 4 drill-ready targets, so you just, at some point, I say this to see, obviously it's easier said than done because drilling costs money, but at some point you've done the surface exploration, you've narrowed down the targets as best you can, you're not going to know what you actually have until you stick a drill in it. So, at some point you just got to get it done. And yeah, I'm sure Ryan will have an answer for you if you come into contact with him in the near future.
Well, I'm sure it will be. I'm sure it will
Mm.
be. But let's move on then and talk about the tailings projects here, or the tailings opportunity. Let's say they've got their 100% interest in tech use. They also took the other project, didn't they? Silvernight, of course. They're giving them, what was their total? About 200,000 ounces of gold in theory. That's about right,
Yeah.
is it, of gold in tailings?
Yeah, roughly 200,000 ounces. So, it's not earth-shattering amounts of gold. But I guess what it is that this, there's a few things to highlight. I mean, the first is that they're only buying it at like under $4 per ounce of gold is so that acquisition cost. When you're talking, which is very cheap. I mean, like generally, if you're trying to get gold in the ground from like a defined resource,
Mm,
you're looking at $82 per ounce, acquisition.
mm,
So you straight away you have like a much higher profit margin than you would if you were buying, a physical. And then on top of that, obviously tailings have already gone through a significant amount of processing. You're not having to like blast the gold out
yeah.
of the ground or crush it. And therefore, the not only are you buying it a lot cheaper, but the operating expenditure should be a lot cheaper as well. Now, obviously, these tailings, as tailings, the whole point of tailings is that they get dumped because previous miners couldn't get the gold out of them. And so the only time when they become, actually valuable is when a new technology comes along and you're able to process them. Lithium, for example, with like new generation of like XRT sorting and like color sorting, there's a lot of spodumene tailings which can now be processed with this new tech that couldn't in the past. And with gold, it's interesting because it does look like Fulcrum is going to be licensed exclusively to use a new technology developed by Extract, which is going to allow them to get gold out of the tailings at a limited cost. And yeah, I mean, not only are you potentially going to make a lot of money, you're also going to solve huge environmental issues.
Yeah, and that's very important as well, isn't it? Because of course you've got all these tailings that are sat around, well, needing reprocessing, and also just posing a danger as well, really, as well, because these tailings dams are susceptible for leaking. In the worst case, susceptible to actually breaking, and of course it's full of horrible acidic cyanide-based solutions, isn't it?
Well, I mean, you use cyanide leaching to process. Most gold in the world, I believe, is processed using cyanide leaching. And then, yes, essentially you have this kind of big steaming, oozing mess of just, horrible, watery, disgusting tailings. And you're trying to, it's kind of like Canada doesn't really have a solution for this problem. And what you're finding more and more is that local people don't want new mines being built because they know, um, often there's opposition regardless, but what they do know is that once a company leaves, no matter what, they're going to leave a tailings problem. Which is good. It means that you're going to be living next to this kind of like massive issue. What if there's a landslide in the future? What if the cyanide? What if the chemicals leak into the environment and like destroy the wildlife? What if there's so many problems with it, and these tailings are all over the country. And I guess this is kind of like an interesting point because if you want to come along and make a new mine, you might get opposition. If you're Fulcrum with this technology that process these tailings, not only are you getting gold out of it, you're also solving a problem for a local community.
Yeah.
So they want you to come in and deal with their tailings problems. And then on top of that, obviously, if you're like a larger company and you've built like a huge tailings dump, they can cut you if they come along and say, look, we can solve this problem for you. They can buy it very cheaply, and obviously with tech use and the other asset, this is exactly what Fulcrum has done. They managed to get these assets fairly cheap because the owners of them wanted the problem solved. I mean, I'm really speculating, in the far-flung future. So, I will highlight this as, speculation, but if this tech has already been proven to work at Silver One, it's been licensed out to Bechtel, which is a massively important mining engineering company. And the basic thing for me with it is that there could be a time in the very near future where when you're building a mine or putting together a mining plan, and trying to get your license, you'll need to have access to this technology to get it approved.
Well, that's a point that you made in the article, wasn't it? That sort of future projects might require something like this. And I think you even suggested that Fulcrum could become a ESG company.
Well, they could. I mean, okay. I mean, like it's kind of again, this is far-flung future stuff. But I mean, if you look at like Extract, they don't. Extract is a technology company. They don't have the practical experience to roll out this tech, which what it does. For anyone who maybe doesn't know exactly what it does. I mean, they've created some specific chemicals and a specific way of setting up standard mining equipment, so that when you process tailings, you can dewater them, you can deal with all of the problem chemicals, and also get the gold out of it in a very cost-effective way. But the thing is, if you've got this like swimming pool of filth leaching into the wider area, and like often you've just got wooden dams, genuinely, trying to hold it all back, and the wood is all rotting.
Yeah,
the water finds a way. And then, Fulcrum comes in and you go, right, we've licensed this technology from Extract. Hopefully that'll happen, an RNS on that in the very near future. We can deal with these tailings. We're going to walk away with the gold, but we're just going to leave you only water. There's, chemical waste, but it's going to be like, it's going to be something that you can dispose of safely and easily. And then you're going to have just this heap of dry, non-toxic tailings, which you can let out into the wider environment. That's something that's going to hugely improve like quality of life. It's going to improve the way an area can be used, and potentially a lot of mining licenses in Western Australia or Canada are rejected because of ESG considerations. So if you need your mining license and they've said, oh, we don't want to have a big tailings problem at the end, this is something that could help in the future. Now, I guess one of my concerns, which and it took me a while to like try and figure it out, is we hear about this a new magical mining technology every like week or so. It seems to be there's something new that's come up that someone said, oh yeah, it definitely works, and it might work in a lab, but actually not out in the field often it doesn't. Well, this tech, we know it's worked in mineral sands and oil. We know from Silver One, which is another company which has been using it initially, that the performance on the tailings was twice as good as what they were using before, and therefore we kind of know that in practice it's going to work. Now, if Fulcrum can prove they get the license for the tech, that's the most important thing, the exclusive license over a geographical area, say Ontario. If they can do that, and then they can apply it and get the gold out of the tailings and solve a huge environmental problem at the same time, you're probably going to find that you have a really, really successful business. Now, Fulcrum Extract, there's a 4-phase deal to get like a licensing technology agreement. The phase 1, a primary evaluation of how effective and enhanced gold recovery through tech it is, actually out in the field. And then a conceptual study, laboratory test work, and then phase 4 economic assessment study. But I think what the key point to understand is that this company, it's only Yeah, what's its market cap now? It's like must be like
7, is it around 7?
7, 8, yeah, £7.5 million. Now there's a couple of important things here. Like, so obviously you're kind of getting in on the ground floor of a really interesting opportunity when, before it's gone leaps ahead and advances. Now it launched its IPO, this Fulcrum, back in February 2023. There weren't many IPOs going on at the time. But right in the middle of the downturn, it raised 3 million at 17.5p a share, and it's now just above 15p. And it's been in that 15, 16p range since June of last year. Now, other operators in the area, and I won't name them because it's feel a bit mean, but other operators, and then just mining in general, over the past year or so, obviously most have kind of fallen flat on their faces. Not for any fault of their own, but just because the wider sentiment in the sector is so awful. And yet Fulcrum is gone from 17.5 to like 15p. If you're dipping by only like 10-15% since the IPO, that kind of suggests that you've got shares in very sticky hands and investors who aren't really going anywhere. And it also suggests that that Fulcrum has something, in this case the technology now, which is preventing a larger sell-off, because what it does, it implies that there's larger investors. Bear in mind, only 50% of the shares are in available publicly. Another 50% are tied up, and are not available for the public. And those shareholders, those larger shareholders, are very keen on making the company work. So it's not one of those cases where you can't, okay, well, it IPO'd and now it's down 90%, and now we're buying it on the bottom, because that tends to be what I quite like doing. It's actually managed to hold itself so up, and that 15p level doesn't seem to be falling anytime soon. So yeah, it's looking good, looking wonderful.
And you think that's because of the shares are held in sticky hands from the people buying at that price, practically when it was going through IPO?
Well, I've seen the docs, like the lowest price that anybody got at the IPO was 10.25p, right? So a lot of the time with small cap companies, family and friends get shares for like 0.1p.
Yeah, as you're going down that IPO route.
Yeah, and then you IPO at like 15p, and then no matter what they say, if you're looking at like a few $100,000 in profit or whatever,
people are gonna
people are gonna should I just whereas if you're going in at over 10p and that's the lowest price anybody got, then it signifies two things. The first is that you have confidence that the company will work in the longer run. You have confidence in the management and the people behind it, Ryan and Aidan and the others, but also that you're putting your money where your mouth is. You're going, I'm going to buy at this share price, and yes, it's slightly lower than what the IPO price was. It's lower than what the IPO price was, but it's not nothing either. And other IPO, potentially other IPOs can learn from this, because it has, I think anyway, protected the share price from falling too much.
Okay.
Yeah, I think so.
Okay. Yeah. Well, that's obviously, it has held up very well. So that's really good. I mean, does it really come down to? Do you feel there's a risk here? I mean, do you feel that the tech is not fully proven yet? I mean, that's one thing that I'm sort of waiting out for, is to see these sampling result programs, which I think is due, well, very soon actually. Possibly, I think you even said potentially sort of in May in your article. Now, there's time with what I think Ryan's been saying as well, that testing the real world efficiency of this solution in recovering gold. But I mean, it's not going to be a binary, though, is it? It's not going to be yes. It's not yes or no, is it? I mean, they're working with Bechtel, who you've alluded to as well, which is extremely encouraging. But what's your thought? I mean, is it going to be a yes or no or catalyst moment?
No tech is ever guaranteed, right? And as I said before, when you when you develop something in a lab and then you put it out into the wider world, geology as a way of laughing at your efforts. But that's this. If you take a little step back, most gold and silver traditional leaching, this tech is it's solid liquid separation technology. It recovers metals and more water. It's got some 40 patents attached to it. And the other thing is the technology is much quicker. So cyanide leaching, I mean, you're looking at like hours or even days to make it work. Extract is much faster. I mean, you're talking much faster. So you're going to get more minerals from what was previously classified as waste. Companies would can fulfill sustainability commitments a little bit better. You can use less greenbush resources. You conserve nature. You reduce the environmental footprint. So it's all. But again, as you say, does it work? Does it work? I think it looks like it does, based on the evidence that we have. Obviously, if we knew that it worked, the market cap would be, of Fulcrum, assuming they got a license, would probably be about 100 million. But you can't know that yet. Obviously, they're the reason why you do the tests in the first place. But again, Bechtel does not get involved in technology that doesn't work. I think that's one thing. If you look through like other techs that they've worked with or company they've been partnered with for a long time, like they have with Extract, they don't tend, or they don't they don't make massive announcements unless the technology is working. But again, the other thing, is that Silver One, as I said before, the Candelaria mine and the silver mine in Nevada, they did a large report on TNS, which is the name of the technology, and so they could potentially double silver recoveries and cut leaching times. And so it it's not just the processing tailings. This is important. It's also Candelaria silver mine is like an ongoing mine, like a traditional silver mine. They're producing tailings that are inert and they don't generate acid. So you can have this tech not just to like deal with the current tailings problems, but prevent them from happening in the future. So it's the president and CEO Gregory Kerr of that company said the tech performs well in the treatment of difficult or refractory mineralized material, such as partially leached material on the heap leach pads.
Yeah.
So I was talking about the timing. Silver One, you're talking about a leach time of 24 hours. This is non-optimized. It could probably get brought down even further, but direct comparison, they were looking at 46 to 96 hours in column tests for 120 days. That's in previous RNSs. That's a huge reduction in operating costs as well. I mean, when you're running a mine, like margins of gold obviously are great at the moment. Gold will fall back eventually, one would imagine. It may not. It may rocket to new record highs and stay there forever. But gold is cyclical like everything else. And everybody needs to have the best margin they possibly can. Now, as I was saying before, one of the key things to understand about it as well is that the patents are about how standard mining components are put together. So it's not like you have to have like a specific magical ball mill, built by blind Belgian nuns and shipped half
I
the
noticed
world.
you said that.
No. What did it say? Handmade by blind Belgian nuns in the ruins of the Acropolis at the apex of Mars and Jupiter. You hear this all the time in mining, don't you? Just like, we're going to get this one part and it's going to fix everything. But unfortunately, it has been made specifically for us. And it'll be really well. That's not what this tech is about. You can get the parts that you need as long as you're in the right places in the world, within a few hours drive from like most major suppliers. What the patents refer to is the way you put the parts together, but also the chemicals and the reagents and all the other the chemical mixtures essentially that separate it apart. So the point is that once you know how to put it together and you know how to get the chemicals to work together, it's something that you can scale up very quickly and very easily. And that's something with like other tech, other like tech advances that on top of like does it work? How scalable is it? How quickly can you scale it? Because it's all very well saying, oh yeah, it definitely does work, but actually every company that wants to have it, has to pay millions and millions and millions, and they might be waiting years to get it delivered. That doesn't. Whereas with Fulcrum, that's not the case. It's going to be the case that once they've proven that it works, it's something you can scale really, really quickly.
Yeah. Okay. And Bechtel, Charles, just tell me about them. Why are they such a significant name in this space?
Well, okay. So I mean, one of the first things to understand is in mining, there's kind of in mining, I'm trying to explain it. Everyone's heard of like Rio Tinto, right?
Yes.
And Glencore and BHP and like Fortescue, all like the majors in the space, and like Anglo American and BHP might want to buy them out. And these kind of like major public listed companies that hit the headlines all of the time. Um, and yeah, 100, obvious, and but with companies like Bechtel, they are the companies behind those companies. It's a massive,
Okay.
massive engineering, construction, and project management company. It's been around for well over 100 years. It's tackled huge projects all over the world. It's and it's not just about mining, it's civil infrastructure, massive facilities for the energy sector, oil, gas, nuclear, water treatment. They design all the projects, they build all the projects, and the key thing for them is that they can do everything from start to finish. It's hard to overestimate them. They're massive.
Okay.
They're a massive, huge company. And yeah, I think that the association with Bechtel, for between Bechtel and Extract and Fulcrum, is a really really important thing to consider. Because again, Bechtel doesn't sign up with companies that developed a technology that doesn't work. They just don't. So if that has happened this time, it'll be the first time that I've heard of. And I try to keep a track on a lot of these decks because obviously if you come up with something that does work and does improve the mining process and it gets rolled out potentially worldwide, you can make an absolute fortune. But again, it has to be proven to work practically first on site in multiple sites before you get there.
Yeah.
And obviously we're kind of at the start of the process.
Yeah, very much at the start of that process, but hopefully more tangible
Right.
evidence comes out in the near future to show the potential here. I mean, just on the thinking about, well, your opinion first of all on how you see this as an investment opportunity, not without risk, of course, as always. But I mean, what do you think about Fulcrum's journey now going down to this mostly tailings approach? I mean, what was it? This is over 10 billion US dollars estimated worth of gold in tailings that is basically just sat there because no one knows what to do with it. I mean,
yeah. I mean, well, exactly
they're
that.
just sat there waiting, like not even the mines have finished. There's no activity on site. They're almost abandoned, or they look
Well,
care and maintenance, or
they're just they're just there essentially, Mark. I
yeah,
mean, obviously they're a huge environmental risk and just a problem for the country in general. But again, as I say, the tailings exist because it's the waste produced by the mines. Like the mines generally don't want them. There's generally precious metals in that it's very difficult to get out of them, unless of course you develop a new technology to make it happen. But that $10 billion figure is almost certainly an underestimation as well. That's what has been reported officially over time. And mining companies, if you want to Google Glencore lawsuit or BHP lawsuit or Rio Tinto lawsuit, they tend to gloss over the damage that they do.
yeah,
It's probably the case that you're going to have billions and billions more than 10 billion. But, $10 billion is a good start. And I guess the question is, yes, okay, you might have $10 billion of gold in the tailings. And yes, okay, assuming all the dreams come true and you license out the technology and you've got all the, and Fulcrum have access to $10 billion worth of gold that they're allowed to just dig, get out of the tailings. How much of that gold can they get out of this tech? Is it all of it? Is it some of, maybe that's another really good question that maybe you could ask the CEO. What percentage do you reckon you can get out of the tailings that you have? So, for example, at Tech Hughes,
yeah.
and is it Silvernight? I think it's Silvernight.
70% was it? You
yeah,
said?
it was 70, but obviously that's in theory, isn't it?
Yeah, in theory, yeah.
Yeah,
And I also
so,
noticed about the calculations they're equating to less than 3.3 US dollars per ounce of gold. I guess that as well
as you
is
said.
it.
Yeah, well, that's the acquisition cost, isn't it? But obviously, if you can only get a certain percentage
Yeah,
of that gold out, then your acquisition cost goes up, doesn't it?
yeah,
'Cause
exactly. Yeah.
So
So
it's
these figures are all still to be determined, aren't they?
yeah, of course they are. But I think again, it's one of those things where like the market cap is so low for the opportunity on offer. If
Mm,
if you're saying, well, it's like a £7.5 million market cap, the share price isn't going anywhere because so many shares are in sticky hands. I buy shares now and wait 5 years. Those could be worth substantially more, and your downside risk is relatively limited because you've got the uranium, the Athabasca, the option and an agreement. the option agreement even, and then you have those other gold assets as well. So do you know, I think it's early stage this tailing stuff, and obviously the most important thing is to get the license, get a hold of it, get the an exclusive license over a geographical area, hopefully Ontario, um, from extract, and then once you have that, if you can prove that it works, then the world is your oyster. And I'm imagining like an RNS. I mean, you're probably going to talk production like 12, 18 months from now, but an RNS, you know, in some point in, you know, maybe late 2025, where they've gone, we've proven the technology works on this tailings. We've got this amount of gold out of the ground. Look how much money we've made. There's $10 million more. Away we go. And then suddenly, you know, it could explode. But again, you know, early stage. But I'm very positive, and you know, I think the team behind this company, you know, whether it's Adam, or Mr. Me, Mr. Me, these are people who are serious people with, you know, successes behind them in the past, and they're the kind of management team that you want to back for future success.
Yeah. Okay. Yeah. Well, I agree. I agree. Did any questions come to you? I've got a couple noted from our chat just now, and I've got some things I'd like to follow up with Ryan. But in terms of when you put your article out, did any queries come back from investors that we can maybe address with Ryan?
Yeah, sure. I mean, there were a few. So the first one, this is the one that probably got more than any other, was why would Extract license the technology to Fulcrum, this kind of like, well, let's be honest, like it is a small cap, you know, AIM listed company over like a major. Why, you know, why wouldn't you give it to like Rio Tinto?
That's a very good question. Yeah.
So,
yeah.
you know, I mean, there's a couple of answers, you know, I can give to you there. I mean, the first is that there's a personal connection, but I think it's best if, you know, Ryan maybe explains that. And the second is majors like to see a technology working in practice on a smaller scale first, because as I said, you know, regardless, you know, of anything else, you know, if I see, you know, like, you know, 100 new mining technologies being announced in a year, you know, the CEO of Rio Tinto is going to probably see 1,000 people coming to beg him with like a begging bowl saying, look, we've got to come license our stuff. But the connection with Vector was really important. So, you know, which gives it, you know, a much higher chance of working. Again, we've already got that, you know, evidence from Silver One. But I guess, you know, the personal connection is there. But again, you know, for Ryan potentially to answer. Cash, how much cash you need between now and profitability? How would you raise it? If tech's already been shown to work elsewhere, as like, you know, it's in the article, why is the market not responding already? I don't know. I think potentially, you know, the story just isn't out there enough. Not enough people know about the company potentially. And is Fulcrum, you know, really just a tailings business? And it's, well, no, it's not. Obviously, they've got the other assets, and as I said, this technology doesn't just work on tailings. It can be implemented into working mines to prevent there being toxic tailings in the first place. But yeah, I mean, there's a few questions there for the company, but I think it's one of those ones where it just won't be on investor radars for a while, and then when it does get on their radars, you'll already be too late.
Well, I think, yeah, that's it, isn't it? It probably comes down to that. It does seem like Fulcrum is just not on radars, not loved at the minute. I mean, it's not completely unloved. It's still got a half decent market cap. But yes, we've talked about why that could be. Well, but when the evidence comes out, I would agree. If this does look good, this tailings opportunity, then I mean, it's like that last question there: is Fulcrum just a tailings business now? Really, it kind of downplays it a bit. I mean,
yeah,
tailings doesn't sound as exciting maybe as I don't know, exploring for stuff and that kind of story. But back in the day, I mean, tailings, if a company was into tailings, it was quite exciting because it was seen as potential very near-term cash flow,
near-term revenue, and then on top of that, you know, you don't have to blast the rock out.
Not like big expenses.
Getting a mining license is it's not even mining. Getting a license is very easy because there's already one historically. And I guess what it is that previously people go, oh, you know, we're going to process tailings, and you're not going to get much material out of it, so it's not very exciting. Whereas with this new technology, if you can get, you know, the majority of the gold out, whereas previously you couldn't, then it's, you know, it's a shift in the sector it's a shift in what tailings processing can be.
Exactly. And we could be looking here at a fundamental shift, and that is very exciting.
Oh, it's incredibly exciting. But again, it's one of those ones, I look for the early stage ones, I look for the technologies that I think are going to work and that are really early stage, and the sentiment isn't there and people don't know about it yet. And then, when it does work, you're going to, not only personally, but just the company will just make a fortune. But again, you've got to prove it all works out in the field, and that's where you're going to get the investors come in when those RNSs come rolling in saying, yes, technology does work. This is, we know the acquisition cost of a gold now, or at least one of the projects is $3.30. We know that gold is selling for about, however much, thousands of dollars an ounce. So, and I guess the question is, how much is it going to cost to license out the technology? What are your profit margins going to look like? How does it work in practice? But, when you're looking at a company that's kind of just about starting out in this process, you could stand to make a large amount of money if you just buy shares and hold them. And I guess if it helps, if you look at the corporate structure, there's a large number of people who hold shares in the company who are doing exactly that. And there are many people who have held shares who could have sold them since the IPO and just haven't. So that's encouraging as well.
Well, as always, thank you very much, Charles, for your time. I'll be following up with Ryan on some of those points, and we can discuss Fulcrum a little bit more later. But fantastic article. Thank you for putting that out there, and thank you for your time today, sort of digesting that with us.
Yes, well, what possibly the only other thing that I'd maybe ask Ryan is, technically, chemically, because a lot of it is patented and shrouded in secrecy, this technology, how much more kind of technical detail are we allowed to know? Potentially you'll be able to shine more light, more than I can find publicly.
Yeah, indeed.
Okay, perfect. Cheers, Mark.
Thank you, Charles. Bye.
Bye.
Thank you for listening to another podcast from Market Musings. Tune in next time.